Are you prepared for the transformative shifts in the housing market for 2024 and 2025?
Absolutely. We've gathered in-depth insights from renowned experts including Danielle DiMartino Booth, Jeff Snider, and Fred Thiel.
Welcome to our summary video, where we break down hours of complex financial analysis into actionable insights.
Thanks to advanced AI technology, you'll get all the crucial takeaways in just minutes.
Imagine discovering the next big investment opportunity before it becomes mainstream.
Stay tuned for some surprising predictions that could reshape your financial strategies.
Just a quick note, this content is for educational purposes only and not investment advice. Today, we summarize Danielle DiMartino Booth's insights on the uncertainty surrounding rate cuts and their implications for inflation.
DiMartino Booth highlighted that while the Fed aims for a 2% inflation target, current rates are still hovering around 3%.
DiMartino Booth emphasized that the path to the Fed's 2% inflation target remains uncertain, particularly as inflation hovers around 3%.
She clarified that recent discussions among Fed officials reveal a divide, indicating indecision about future rate changes.
Indeed, the Fed seems to be navigating the delicate balance between fostering economic growth and managing inflation.
DiMartino Booth noted dissent from Fed officials like Susan Collins, reflecting internal conflicts within monetary policy.
Wow, differing perspectives could significantly affect the Fed's credibility and future actions.
DiMartino Booth pointed out the rising bankruptcy cycle, indicating growing inequality in the economy.
The return of student loan repayments could further intensify these economic disparities.
It's like watching a slow-motion train wreck. The signs are evident, but are policymakers ready to address them?
DiMartino Booth strongly predicted that we might see more rate cuts than currently expected, estimating around 4 to 5 reductions.
That's a significant adjustment. What indicators are driving this prediction?
As DiMartino Booth speculated, uncertainty surrounds whether Powell will retain his position after May 2026.
With all these potential shifts, every decision could reshape the economic landscape.
In conclusion, DiMartino Booth stressed the need for strategic actions by the Fed alongside household awareness of upcoming economic pressures.
This insight underlines the interconnectedness of financial policies and their real-world impacts.
In this analysis, we're diving into insights from Jeff Snider on concerning divergences currently noted in the stock market.
Jeff emphasizes that a massive influx of cash amounting to $500 billion this year has led to complacency among investors.
Jeff suggests we are witnessing a potential bubble as rate cuts inflate stock prices unbacked by solid economic fundamentals.
Share prices gained significantly, a scenario not seen since the late 1990s, raising concerns. Jeff points out that this $250 billion showcases an alarming complacency among investors.
It's like a high school party where everyone's enjoying themselves until unexpected consequences hit.
Jeff predicts that the burst of the AI bubble could cause substantial disruption in the real economy.
So in essence, he suggests that today's optimism may lead to a future downturn.
Indeed, investors should prepare for potential repercussions.
Ultimately, Jeff emphasizes that understanding these market dynamics is vital for all investors.
It's a wake-up call. Awareness of economic fundamentals can help investors avoid substantial losses.
In today's analysis, we delve into Bitcoin's trajectory as outlined by Fred Thiel, the CEO of Marathon Digital, who shares insights on potential price surges and demand dynamics.
Thiel indicates that despite expected corrections, Bitcoin could reach approximately $200,000 by the close of next year.
Thiel states a correction into the low 90s is expected, but anticipates a surge towards $200,000 thereafter.
He notes that the recognition of Bitcoin as a strategic reserve will help push demand. Thiel notes strong demand from institutional players looking for investments beyond traditional assets.
Could nations adopting Bitcoin reserves significantly alter market dynamics?
Absolutely. Reduced supply alongside growing institutional interest could lead to significant price increases.
Thiel raises concerns about government involvement skewing market balance.
What happens if the government liquidates part of its reserves?
Exactly. That could lead to significant price drops, especially with impulsive actions.
Thiel highlights Marathon's shift towards sustainable energy solutions to manage costs.
How will that affect mining profitability?
By minimizing energy costs, miners can remain competitive even during market downturns.
Thiel envisions a significant upward shift in Bitcoin's value as countries adopt it as a reserve.
However, this trajectory will largely depend on government policy and central bank actions.
In conclusion, Thiel's perspectives highlight the interplay of opportunities and risks in Bitcoin's evolution.
Investors should remain alert to both market shifts and political dynamics impacting Bitcoin.
Today, we're diving into the 2025 housing market forecast with Nick Gerli, founder of Reventure Consulting.
Nick's insights reveal a possible easing for homebuyers, especially in dynamic regions like the Southeast.
Nick suggests we're witnessing a significant housing market shift as we head into 2025.
This change is largely driven by rising inventory and common affordability challenges for buyers. Nick notes that dramatic inventory increases are reshaping Florida and Texas's housing landscape.
That's a startling turnaround, especially considering those states were once seen as hot markets.
Exactly. Average price declines are a clear indicator of changing times.
Nick emphasizes that owning a home is one of the most expensive times in history.
It seems like the myth of endless rising prices is finally being challenged.
For sure, rising costs are pressuring potential buyers to rethink their choices. Nick highlights decreasing domestic migrations as a substantial trend affecting demand.
So, the work-from-home boom seems to be reversing?
Yes, and many millennials are simply not willing to overpay for homes anymore.
Nick predicts that buyers will discover better opportunities in 2025.
That's exciting news for anyone who has been waiting for the right moment to buy. Nick shares that despite some shifts, national price growth could remain minimal in 2025.
So, stabilization might give way to gradual declines in some markets.
Exactly, but rapid changes seem imminent.
As Nick concludes, it's crucial for both buyers and sellers to stay updated on market conditions.
Understanding the trends could provide significant advantages moving into 2025.
Happy New Year, everyone. Today, we're discussing strategies for seizing real estate opportunities in 2025.
Absolutely. We will break down investment strategies based on various risk tolerances and investment goals.
Rob emphasizes that starting with owner-occupied properties is a key strategy in 2025.
This approach reduces living costs while building equity quickly.
Exactly. It essentially transforms your home into a wealth-building asset.
Kathy argues that house hacking can empower new investors to significantly reduce their living expenses.
That's a huge financial relief. With proper management, it seems like a smart move.
James states that understanding financing options is critical amidst fluctuating interest rates.
It's foundational. Without this knowledge, evaluating potential deals becomes challenging. Henry differentiates between cash-driven short-term flipping and developing long-term rental portfolios.
It's akin to constructing a solid house. A robust foundation is essential.
Rob foresees the potential for stabilization of housing prices despite ongoing inventory challenges.
Therefore, targeting affordable rental markets could yield beneficial long-term outcomes.
Experts underline the necessity of adaptability as market conditions shift.
Absolutely. Collaborating with knowledgeable peers fosters growth and understanding.
Wow, that was a wide-ranging discussion with so many valuable insights.
Absolutely. From Rob Abasolo's focus on financing strategies to Danielle DiMartino Booth's take on the Fed's challenges, each guest offered something unique.
And they all seem to agree on one thing. Adapting to market conditions is crucial for any real estate investor.
Right, but it's fascinating to see how opinions diverge. For instance, while Rob and James are optimistic about market resilience, Nick raises valid concerns about buyer affordability.
Then there's Fred Thiel, who predicts Bitcoin might soar after a correction, but Jeff Snider's caution reminds us to stay alert.
Exactly. It's a complex landscape out there, and we must keep considering different perspectives as we move forward.
If you enjoyed these insights, don't forget to like and subscribe. Your support helps us bring more expert analyses to your screens.
Yes, and stay tuned for more content where we'll explore the intricate dynamics of global finance and investment.
Thanks for watching, everyone. Until next time, keep questioning and keep learning.